Having too much trouble picking stocks? Then you might consider whether investing in unit trusts is a good option or not.
Let's use Amana Saham Bumiputra as an example. In 2022, due to the volatility of the capital market, the ASB dividend payout ratio was at 4.6%, which is lower than the 8% dividend payout from 10 years ago. So you might be wondering, how can I get better returns then? Well, one good option would be ETFs. In this video, we'll look at what ETFs are and how you can invest in them with M+ Global. So what is an ETF? An ETF is a basket of securities that includes a variety of stock, bonds, or other assets, and it is traded on the stock exchange as a single security. Take the S&P 500 index, for example. It is recognized as an essential benchmark for measuring the performance of the US stock market. And the S&P 500 ETF, aka SPY, is an ETF that replicates the performance of that index. In other words, if you were to invest $100 in the S&P 500 ETF, that $100 will be divided into smaller portions and invested into a portfolio of the 500 strongest listed companies in the US. These companies include Microsoft, Apple, Google, Tesla, and Amazon. The S&P 500 ETF is an excellent long-term investment because its returns have grown at a compound annual rate of 10.6% in the last 10 years. Warren Buffett himself, the renowned investor, is a big proponent of this index and believes it can beat most investments in the long run. However, this is just one of many ETFs available in the whole market. And you can find other variations such as stock ETFs, bond ETFs, and many more. Consider investing in ETFs as they are considered a low-risk investment that's low cost, has stable returns, and helps diversify your portfolio. You get all this without needing to spend too much time and energy on stock selection. Start your investment journey with M+ Global today, and to see more videos from M+ Global, subscribe to our YouTube channel today.
M+ Global, winning the world.
Hi, good evening, everyone. Welcome to the M+ live webinar today. And this month is our ETF Bonanza. Don't forget, we have a lot of prizes for you all. And perhaps the first event that we have is definitely the being rewarded $1 for every trade that you are doing for this month until 2nd of November. So that is the first prize to be won or to be rewarded. Secondly, we have the $5 to be rewarded if you are trading throughout this session of market until the market closes at 4 a.m. in the morning. So this will be rewarded to only those 20 unique users, the first 20 unique users that will be trading tonight, okay, until the next market morning. And this will be rewarded with $5. So this is the ETF Bonanza. So are you excited to trade on ETFs this month? Perhaps that this will be your starting of the journey of the ETF. And we have the webinar that we have done last week, and certainly that covers the interesting topic about DCA. But last week's moderator Hui Ming said my strategy is a bit boring, but let's give you some recap on what we have mentioned during that session. So firstly is about the mastering ETF, invest like a pro from day one. So we would try to also give you an understanding of what sort of benefits that is investing in ETFs. First of all, diversification is the way to go. Secondly, ETF is such a low cost trading opportunities. Trading with ETF itself is like you are saving a lot in terms of the management fee and things like that. So it is a low cost investment style for many normal investors or investors that doesn't like to to look at the portfolio from day to day. And thirdly, it's very transparent. So whatever ETFs is actually trading, you will be able to see exactly what they are trading, and you can actually follow in that sense. unlike a lot of unit trusts and things like that, maybe some fund managers is buying something that we don't know, but ETF itself is very, very transparent in that sense. So last week we covered equity, bond, and also commodity ETFs. This week, we have a special guest to talk about leverage and inverse ETFs. So last week I'm the guest speaker, but today I'll be moderating the session, and we will have our partner Direction to talk about leverage and inverse ETF with us. Okay. Some of the key considerations that we have talked about in the previous session is who is the issuer, how big is the AUM, and what are the fees incorporated. So these are the three key elements that I think is very important for us to discuss and also to understand before we really venture into ETF. Okay. And last but not least, this is so-called a winning strategy backed by data. So I'm not saying that this is a sure win, but at least based on data itself, if you are invested in S&P 500 or even the QQQ over the past 10 to 20 years, they should be giving you some good opportunities by using DCA. So why? What it is actually a fixed amount that you are putting in on a regular basis, on a regular intervals. And why it works is because we don't time the market, but instead we use as many intervals or regular time intervals for us to expose to the market. Be it ups, be it downs, we are always in the market. So that is why it removes the emotion elements when you're trading the market. So throughout time, in the DCA itself, this is the DCA cost and also the S&P 500 portfolio value if you are buying just into SPY throughout the past 10 years. So before we go into this, I also want to emphasize that Bursa is actually providing a very good opportunity to also trade the Bursa universe of ETFs. So there's about 16 of them on Bursa, and the best out of this campaign from Bursa is that throughout this period of time, there are 3 investment windows. Currently, we are in the 3rd investment window that you can actually win a trip to Tokyo, a 6-day, 5-night trip. Japan for 2 packs, okay, flight and also the hotel included. So these are some of the very exciting campaign from Bursa, and also don't forget this is the ETF Bonanza month, and we will be having the US dollar 1 reward for every trade that you have made throughout this period of time until 2nd of November, and we'll calculate it and we'll rebate you or reward you by then. And for these 2 live streams, so last one we have passed the last first live stream. So in this live stream itself, we also will reward those that for the first 20 unique users, you will be able to be rewarded by $5. So that is the idea behind the ETF Bonanza month. So this is the ETF Bonanza month. Hopefully you trade more and win more. Okay, so last week we talked about very normal ETF. So this week we will handle something more sophisticated, but at the same time it's very knowledge. We have to keep on upgrading ourselves into understand what is leverage and inverse ETF. Basically, the more knowledge we can gather, I think it reduces our fear of investing in the stock market. So that is the whole idea of these 2 events, which is we talk about ETFs, but this round we talk about slightly complicated stuff. But at the same time, we also want to address your concern and make sure that you are trading within the risk portion, within your risk means. So if you are feeling that you want to take that risk, but you don't know more about, you want to know more about the leverage and inverse ETF product. So this is a time where we have a very, our special guest from Direction. Her name is Grace Chu, and we have based in, she is based in Hong Kong. Grace has been actively developing and expanding Direction's business in Asia in the past 10 years. Her focus is distributing leverage and inverse ETFs in close collaboration with strategic partners in each key market. Before joining Direction Asia, Grace was with Horizon Securities, where she ran the research and product development product department. Grace started her career with eSpring Investment in Taiwan as a product manager as well. And Grace holds an MBA from Thunderbird School of Global Management in the USA and a bachelor degree of finance from National Cheng Chi University in Taiwan. So I'm pretty sure that everyone knows that the current market situation has been, very volatile. Even with the the Fed's talking about starting to have some dovish tone in the market, but over the weekend we have some rising geopolitical tension, and throughout this period of time we are also having the elevated inflationary pressure and high treasury yield. So this kind of very volatile market, it actually is very good for the traders out there. And how can we tap along with the market conditions with the leverage and invest ETF? Perhaps tonight we will welcome Grace Chu for this event. And perhaps Grace, maybe you can start off with what sort of what is Direction about, and how can Direction help the sophisticated traders into getting more alpha in the market?
Sure. Thank you, Louis, for the introduction. Good evening, everyone. Thanks for attending today's webinar. And thanks, Malacca Security, for organizing this webinar. I'm really honored to be invited to speak in this webinar. So my name is Grace, and actually the topic for today's webinar is what you need to know about leverage inverse ETF. So I really hope everyone could really understand, the features and the risks of leverage inverse ETF and how to use them in the correct way after today's webinar. As Louis mentioned, there are so many different kind of ETF in the world. So of course, there are some traditional we call vanilla ETF, the one beta non-leverage ETF. Of course, there are so many leverage and inverse ETF in the world. Although all these ETF are ETF, but what are the difference between traditional and the leverage inverse ETF? So in this webinar, definitely I'm going to give you more information and let you really understand what leverage inverse ETF are and how to use them in the correct way.
Yep, definitely. I think maybe you can start off with just telling us what does Direction do, and how Direction's ETF is so much different from other issuers. Yeah.
Sure. So definitely Direction, as you can see, right? Direction definitely is among the top two leverage inverse ETF issuer in the world. So probably, I guess many of you might not heard about the name Direction, but if you ever trade 3 times leverage or 3 times inverse ETF listed in US market, probably Direction, because around like 70 to 80% of the 3 times leverage and inverse ETF listed in US market are issued by Direction. So definitely Direction is very famous for our leverage inverse ETF, and our headquarters is based in US in New York. And so far we have more than 80 ETF listed in US market on New York Stock Exchange market, Stock Exchange, and the Nasdaq Stock Exchange. Of course, most of them, they are leverage inverse ETF. We also have some, like thematic, the non-leverage ETF. So of course, as everyone know, and Louis definitely mentioned a bit, right? Leverage inverse ETF are different from some traditional non-leverage ETF because leverage inverse ETF are short-term trading tools which are used for for some short-term momentum trading opportunities, and that leverage inverse ETF enable traders or investors to express their bullish or bearish view. That's the big difference between leverage inverse ETF from non-leverage ETF. And I think so that's to answer Louis' question, right? I give the kind of introduction about Direction and to give you the basic concept and information about what leverage inverse ETF are.
Yeah, thank you so much for the introduction, Grace. I believe that throughout this period of time there are so many types of different ETFs, and especially in just now you have mentioned leverage and inverse ETF is actually good for short term. But what about could you explain how does it work and how fundamentally is the operational or execution part of the ETF? How and what kind of market scenario will be very suitable for using leverage and also inverse ETF?
Sure. I think from this slide, as everyone can see, right? Um, the reason why today we wanna introduce or give you more information about left reverse ETF. The reasons why we want to do that, we want to highlight left reverse ETF today, is because if you look at this metric, this table, you can see that actually last year the traditional 60-40 portfolio, of stock and the bond strategy fell last year, and last year is a very tough year for most of the asset classes such as stocks, bond, and even cryptocurrencies. Only commodity oil and US dollar recorded gains. So in this kind of market, because I think everyone have to understand. I mean, since the Fed start to increase the interest rate in the past 1 year, the interest rate from super low until more than 5%. Everyone have to understand the world. The in the future will be so different from before. I'll call that's for example like a low inflation, low interest rate, low volatility world will turn into high volatility, high inflation, and high interest rate world. So definitely the investment market will become much more volatile. The traditional long only strategy might not be the perfect or best strategy. So I think everyone need to be ready to embrace more uncertainties and volatilities in the world and in the investment world. So that's why we want to focus, we want to talk about leverage reverse ETF as some short-term trading tool. And from this slide, as you can see, definitely, like I mentioned, there are so many uncertainties. No one knows whether US Fed is gonna, stop the interest rate after November. No one knows that, especially what happened, in the weekend. Everyone saw that, the geopolitical tension escalates, the push up the oil price and everything, and also, like so and inflation. This Friday will be a very important day because US going to announce the September CPI index, right? So that's a very important reference for US Fed, about whether they are going to have another interest rate high in November or not, something like that. And so that's why here we want to back to Louis' point. Why we want to talk about left reverse ETF. What's the big difference? Here, as you can see, like I mentioned, traditional non-leverage ETF, for example, like everyone know SPY, QQQ, for that kind of ETF, they are so-called traditional ETF. They usually use they are physical ETF. They just they actually acquire and hold the underlying asset or securities on which the ETF value is based or tracked, right? But leverage reverse ETF is also a financial tool that offer magnified exposure to the movement of the underlying asset, which can be a basket of stocks, aka index, single stock, bonds, or even commodities. And leverage reverse ETF, synthetic ETF, because it is related to leverage, right? So when it comes to leverage, of course, it uses some derivative products. So everyone have to understand leverage reverse ETF, synthetic ETF, and that kind of, and most importantly, the return of leverage and inverse ETF is a daily base. They are designed to provide a certain leverage ratio of its tracking assets daily return. So if everyone buy and hold, for example, SPY QQQ for 6 months, 1 year, 2 years, 3 years, the total return of SPY QQQ should perfectly track, its tracking benchmark, right? But for leverage reverse ETF, it is not the case, because the big difference between leverage reverse ETF from non-leverage reverse ETF is all the leverage reverse ETF in the world, doesn't matter it lists in US, Malaysia, or some other Asian market, as long as they are leverage reverse ETF, they are daily based. They provide the certain leverage ratio of its benchmark daily return. That's the big difference. So yeah, so that's so that's the important feature of leverage reverse ETF. So as here you can see, right? So Of course, people know S&P 500 index. Everyone know, SPY, check S&P 500, right? So, but if investor, kind of observe, hey, maybe there's some potential for S&P 500 to ready or to go down in the coming 1 to 2 weeks, and investor, for example, who expect the index going to ready, and the investor is bullish on S&P 500, what they can do. Of course, there are many ways they can do, and one of the ways they can use some 2-time or 3-time leverage ETF to amplify the potential short-term return. But if investor expect, hey, the market is going down because there might be, the earnings season. If they expect the earnings season, the report are not good, okay, they want to hedge their US stock, their US portfolio. They can also use, for example, one of the way is inverse ETF, aka inverse ETF is that when the tracking index going down, the inverse ETF, the value will going up. So inverse ETF is for people to hedge the down market or take some potential profit in the bear market. So that's the basic. So leverage inverse ETF, as everyone know that, right? Everyone knows index, the benchmark for ETF, most of the benchmark for ETF are indexes. But since last July, in US regulator allow leverage and inverse ETF tracking single stock. That sounds very interesting, right? Because everyone knows S&P 500, Nasdaq 100 index, something like that. But does everyone know that there are some, for example, like Apple, Google, Tesla, Nvidia leverage or inverse ETF? So investor can also find that kind of interesting single stock left inverse ETF in US market as well. So that's some information for everyone. When I explain what's the leverage and inverse ETF, everyone should know that in US there are also some single stock left inverse ETF. So that's the So here, as everyone can take a look at it here. So in US, people can find many single stock leverage inverse ETF, but so far, most of the single stock leverage inverse ETF, this in US market, are tracking technology stock, as everyone know, that Tesla.com, Apple, Google, Microsoft, something like that. This is just some example, example for everyone. So leverage inverse ETF, like I emphasized, leverage inverse ETF, why they are they become more and more popular, because they are ETF. They are just ETF, and they are traded like equities. If they list in US market, they are traded like US equity. You just input ticker, and then you can do the leverage ETF. Or you want to short the market, you can use inverse ETF, something like that. And there's no minimum investment, no minimum holding period, and they are structured like a stock. So there won't be, some margin, no risk for margin call or forced liquidation, something like that. So if investor in, buy leverage inverse ETF, invest in 100. Unfortunately, the investor bet on the wrong side. The maximum loss is initial investment, unlike margin trading, right? If you do the margin trading, the total loss might definitely more than the investor initial investment. So that's some benefit, some advantage for leverage inverse ETF. It's easy to use, it's easy to understand, and simple to trade. That's why people use that leverage inverse ETF as kind of, some potential trade in both up market or down market.
Yeah, Grace, very, very interesting insight. I think what I can gather from your response in this scenario is really to look at the market in different directions. So not only long only portfolio, but instead, if you want to hedge the market, you can also use the inverse ETF to hedge. Is that correct?
Yes, exactly.
Yeah, and also more beneficial for sophisticated traders to actually amplify their earnings, and also to look at the single stocks ETF. I think that is very, very interesting, because but I do understand that if normal investors want to buy into the normal underlying, perhaps it is very expensive. Is that correct? Correct me if I'm wrong, that single stock ETF is slightly cheaper.
Yes, I think from this slide, as I mentioned, leverage inverse ETF are like a short-term trading tool. People use leverage ETF when they are bullish at the market or at some asset class. When people are bearish and people want to short some asset or short some market, they use inverse, right? So feature leverage inverse ETF actually is very similar to futures contracting trading, right, or margin trading. But leverage inverse ETF, they have the similar, feature. You can long, you can short the market as futures, counter, or margin trading do. But leverage inverse ETF, as I mentioned, they are structured as stock equity. So there's no margin account required. You don't have to open margin account to trade any leverage inverse ETF, and there's no risk of forced liquidation. And the investor doesn't have to maintain a certain level of cash in their margin account, right? I believe many investors, when they use margin account, they are so afraid of receiving the call from the sales broker, sales representatives. Hey, you need to put some cash or money. So for leverage inverse ETF, no such withdrawals like futures or margin trading. And Louis, you mentioned, right, for single stock leverage inverse ETF. Actually, that's very interesting. Yeah. So how, I know many people ask, hey, I wanna, if I'm so bullish at Tesla, how can I do that? Probably many people use margin trading, right? Margin trading means you borrow money from the broker and then you create a leverage by yourself. And if you want to short Tesla, what investor can do, people can do like a short selling, which means borrow Tesla stock from broker to short Tesla stock. But with single stock leverage inverse ETF tracking Tesla, the annual expense for this kind of single stock leverage inverse ETF is around 0.99%, which means only 2 basis points per week. And people can do like a 1.5 time leverage on Tesla or 1 time short Tesla. But do you know how much people have to trade if they use margin trading to buy Tesla?
So the cost will be higher. Is that correct?
Exactly, as you can see, because now the margin trading rate for U.S. equity actually is pegged to the U.S. dollar benchmark interest rate. So now it's definitely now it's very approaching 6% per year. So compared to 0.99%, that's a big difference. And if people want to short Tesla, they use short selling, right? There's some concern because investors have to make sure the broker have enough Tesla share, to lend to the investor to show if in this case everyone want to show Tesla, the borrowing costs will getting higher and higher because the borrowing cost for short selling is not fixed, it's floating, depends on the demand, right? So that's why single stock leverage inverse ETF, especially in US, most of single stock leverage inverse ETF are tracking some big technology name. So many retail investors, they really are interested in trading this kind of ETF. And in US so far, according to some Bloomberg the data or some or for some data, the single stock leverage inverse ETF tracking Tesla are the most popular single stock leverage ETF in US market so far.
So a lot of people want to short sell Tesla. Is that correct?
I mean, both sides, because Tesla stock has been very volatile.
Okay. The trading activity has been gaining.
Exactly. Right.
Yeah. Okay. So I can see that the in margin trading, you're saying that the expense is 5.8% for margin trading. Is it due to the recent increase in the interest rate? So that's why that has been up. Yeah. Okay.
Exactly.
So which means that I'm assuming that if the interest rate is going to be as high as for longer term, then definitely people are going to go in for inverse ETF or single stock ETF to buy, right? That makes sense, right?
Yeah, exactly. I mean, 2 basis point per week and the investor can do the the leverage. They are bullish, they can do leverage. In the bearish, they can use inverse ETF with 2 basis points per week. The cost. So compared to the cost of margin trading or the short selling, definitely leverage inverse ETF or kind of of course it's it's cheaper.
Okay, but before we go into the next question, I would just want to ask the audience if you have any questions that you want to ask Direction, Grace, and if you want to ask about market position, market directions, or whatever it is, you can just put it into the comment section. We'll take it at the Q&A section. Then we will address your concerns, and also address whatever you need to know about the market conditions. But coming back to Grace, okay, talking about the so popular about this leverage ETF and things like that, and also we emphasize a lot about the impressive returns. But I also want to warn the investors that these are all leverage and inverse products, and how can you actually advise, or how can you actually bring out the basic principles and tell them about the associated risks about leverage and inverse ETF? Because I don't think a lot of normal investors understand this. And perhaps if we can actually address this kind of concern and risk portion, then perhaps they can actually give us, they can actually trade without any, a burden in their mind. Any things that you want to share on this part?
Sure. As I mentioned at the very beginning, right? All the leverage and inverse ETF are short-term trading tool.
Yep.
Not long-term buy and hold. So, because all the leverage inverse ETF have 2 important characteristics, and these 2 important characteristics definitely I'll explain in the next slide. But to answer investors' question, I think that the most frequently asked questions about leverage inverse ETF is what's inside of the leverage inverse ETF. So leverage inverse ETF actually definitely leverage inverse ETF it definitely use some derivative product, such as swap or future in the portfolio to create the leverage ratio or inverse, ratio. So they are combination of, for leverage ETF, 2 times or 3 times. They are combination of cash, equity, and derivative product. In US, typically we use swap, and in Asia, many local issuer in Asia, they use futures to create leverage inverse to create leverage ratio. But leverage inverse ETF, they at least in US market usually use swap. As you can see from the table, right? A daily 3 times leverage ETF, which means a bull ETF, is composed of cash, equity, derivative. A daily 3 times inverse ETF, which means a bear ETF, is composed of cash and derivative only. And leverage inverse ETF, as I mentioned, are daily based. For example, a daily 3 times leverage inverse ETF is designed to provide 3 times leverage ratio of the index daily return, not 3 times of the index more than 1 day's cumulative return. So that's the big difference. And we talk about single stock leverage inverse ETF, right? So single stock leverage inverse ETF are also leverage inverse ETF. So this kind of ETF also have the same characteristic as the leverage inverse ETF tracking index. And the only difference for single stock leverage inverse ETF is single stock leverage inverse ETFs underlying is only 1 stock instead of the indexes. So that's also all the investors have to understand. One stock, definitely have much more concentration risk than, a basket of stock, aka index. That's why in US, as you can see, the leverage ratio for single stock leverage reverse ETF are much lower than, like a 3 times. But basically, you don't see 3 times. Like inverse single stock ETF, the maximum is 1 time inverse. And for single stock leverage ETF, probably maximum is just 2 times. There's no 3 times. So, but the mechanism, the operation for single stock leverage reverse ETF are exactly similar to, the general leverage reverse and inverse ETF. So here is 2 important characteristics I want to mention. All the leverage reverse ETF definitely have two important features. One is daily rebalancing, and the second is the implication of compounding if investor buy and hold leverage or inverse ETF more than one day. So what is daily rebalancing? Daily rebalancing is very easy to understand because I mentioned leverage inverse ETF are daily based, right? So we have to do the daily reset at the market close every day to ensure that each ETF, each leverage or inverse ETF track as closely as possible to, if that's 3 times leveraging, to make sure it is close as possible to, like 3 times of the 3 times of the benchmark's daily performance. For example, a leverage or ball ETF will likely need to buy on a day when its benchmark index is going up and sell on the day when its benchmark is going down. So this is daily rebalancing. So just put it, simply way to say is that daily reset is that we do it at a market close, like a 4 p.m. US time. So if for example, there are S&P 500 3 times leverage ETF, that's tech leverage ETF, the ball ETF, for example. If S&P 500 daily performance is going up, which means the direction is favorable to leverage ETF, right? Because you hope the benchmark, the market going up. At the end of the day, 4 p.m., we will automatically increase the exposure in the 3 times leverage ETF. If the S&P 500 is going down for leverage ETF, a ball ETF, at the end of the day, we will automatically increase the portfolio exposure. So that's called daily reset. Because daily reset, so if you buy and hold leverage inverse ETF more than one day, of course, there will be compounding effect, right? I believe everyone is, investors are so good at, the math, mathematics calculating. If that's daily reset, of course, the total return for more than one day will depend on its daily performance, right? So if you buy and hold leverage inverse ETF more than one day, for leverage inverse ETF, if that's a trending market, what is a trending market? Which means the market have obvious uptrend or downtrend. In that kind of trending market, you buy and hold leverage or inverse ETF more than one day, for example, 1 or 2 weeks, the total return for your leverage or inverse ETF will definitely better than the index total return multiplied by 3 times or minus 3 times. So that's the compounding effect. But if the market is a choppy market, for example, there's no direction up and down, and then during that period, you buy and hold leverage or inverse ETF with daily reset. We need to adjust the exposure every day, right? And with the compounding effect, you'll find that the total return for leverage inverse ETF will be definitely worse than the index total return multiplied by 3 times or minus 3 times. So that's what I'm saying. So because it's if everyone wants to know more, the calculation, everyone can go for more educational information because we have some time limit. So I just want to just make it briefly. Leverage inverse ETF is a daily space product. If you buy leverage inverse ETF more than one day, definitely there will be some implication of compounding, and with the compounding effect. Here, I think I don't want to spend too much time. Okay, so I think the summary is that the guideline for leverage inverse ETF trading is that the trending market is the best friend for leverage inverse ETF. As I mentioned, right, during the period of holding a leverage or inverse ETF, if it's a benchmark, is tracking show a significant rise or fall, and of course, the investor bet on the right direction. the actual return of investing in leveraged inverse ETF will higher than their expectation. But if the market is flat without any direction and very volatile, and definitely buy and hold leveraged inverse ETF more than one day for a long time, people will see some negative impact, negative compounding effect for the total return of leveraged inverse ETF. So that's why I mentioned at the very beginning, leveraged inverse ETF are tool for short-term trading, not for a long-term buy and hold investment. This doesn't mean people cannot buy and hold leveraged inverse ETF. That's because during the period when you buy and hold leveraged inverse ETF, you don't know how the market or how its trading index will goes, right? So and investor will face more like a market volatility, and the more market volatility will increase the negative compounding effect, for the leveraged inverse ETF. So I think that's the important takeaway for leveraged inverse ETF.
Yeah, definitely. I think Grace has actually mentioned about all the risks and also about the daily reset, and it's always calculated based on daily. I think the compounding error that we can actually face is also quite high as well, especially when you are speculating on the upward trend, but the market is going down every day 1%. You are actually going to be 3 days you'll be more than 3% actually, right? It's actually compound on that 1% itself, and also if you are trading on the 3 times leverage, I think that will also be more than 3%, or even 3 times 3, or maybe you can go up to 10 or even 12%. Is that correct?
Yeah, exactly. Yeah, so it really depends on the daily, the daily return of the ETF, the tracking index or tracking asset.
Yeah, Grace, there's one question for you as well. I think from the comments, I saw Julius asking, what about the daily cost of holding ETF overnight?
I think that's a good question. So I mean, for ETF, the basic cost, of course, like transaction cost, right? Is like it's a transaction cost is similar to like US equity trading, and what's the cost? Of course, all the ETF, including leveraged inverse ETF, have the total expense ratio. Of course, that will reflect in the NAV. But I think the audience question should be, what's the cost if the whole leveraged inverse ETF more than one day, right? So it's also, the question will go back to also like a daily reset and daily counting. Right, as you can see from this chart, I think easy to understand. It depends on how volatile of the tracking index during the period when investors buy and hold leverage and inverse ETF. So the more volatile.
So besides, just want to ask you about this. Just beside the expense ratio, what other costs that it will be incurred? Expense ratio and also brokerage charges. What other costs will the investors incur?
I think these are 2 key costs. The other, I won't say cost, is like all the leveraged inverse ETF for individual investors. Definitely leveraged inverse ETF or leveraged inverse ETF are traded on the secondary market. So I think that's the basic education. I believe, Louise, you probably mentioned about that in your previous webinar, right? All the ETF, they have 2 price. The one price is a market price, and the second is is NAV, the real, the net asset value, something like that. So another thing, I won't say it's the cost, but it's like, because most of investors, they trade ETF on the secondary market, so people just have to watch very closely the like a premium or discount between market price and the ETF's NAV.
Okay, great. Maybe we can go into another section because I think for ordinary investors, they may have basic understanding of investment, but it may be different from professionals in us understanding the price fluctuation. So is it advisable for them to invest in highly volatile leverage and inverse ETF? What guidance or recommendations you can offer to ordinary investors to invest in ETFs?
Sure. As I mentioned, leverage inverse ETF are not very complicated product. They are ETF too, but it's just leverage inverse ETF are daily based. For example, if S&P 500 index is up 1%, we will know that the 3 times leverage ETF tracking S&P 500, the daily return will be 3%, right? And the 3 times inverse ETF tracking S&P 500 index will have 3% loss, right? And vice versa, if the S&P 500 is down 1% today, 3 times inverse ETF tracking S&P 500 will have 3% return, and the leverage will have 3% losses. So that's the basic, it's daily based. Okay. And it's not like us. Some investor will must understand, if I buy 3 times leverage reverse ETF tracking S&P 500, buy and hold for 1 week. If in the past 1 week S&P 500 is up 10%, the weekly return is 10% for the index. Will the 3 times leverage ETF up 30%, 10% multiplied by 3? The answer is no, because it's daily based, right? You have to. It's tracking the daily base of the tracking benchmarks, the return. So that's the most important. So that's why we spend some time talking about, hey, this daily reset and the daily compounding. All these two important characteristics are all because of leverage inverse ETF are daily based products. So they are short-term trading products. So how to use this kind of ETF in the right way? Of course, you cannot use leverage inverse ETF as a long-term buy and hold investment tool. For example, people
definitely no buy and hold kind of strategy.
No.
You cannot work under this situation, right?
Exactly. For example, people can buy and hold like US Treasury, right? Bond, fixed income, or like vanilla ETF, such as, for example, Louis mentioned SPY, QQQ, non-leverage ETF, yes, or some thematic ETF, which is no leverage. Of course, they can be buy and hold, but for leverage inverse ETF, they are short-term trading. They are just like how you trade futures. You will not buy and hold futures for 1 year without doing the monthly rollover. So leverage inverse ETF are short-term trading tool. And probably I want to share more. People might ask, so Grace, what's the average holding period for 3 times leverage or 3 times inverse ETF? If you say you cannot buy and hold, so but how long is appropriate? Okay, I'll say there's no such how long is appropriate time, but we do have some survey like research. Probably for 3 times leverage or 3 times inverse ETF, the average holding period is around 3 to 5 days.
3 to 5 days. Well, that's very short.
It's like a weekly base, and that's for all the leverage inverse ETF, including leverage inverse ETF tracking S&P 500. In US, there are some leverage inverse ETF tracking semiconductor sector or some technology, which are much more volatile, and we add 3 times leverage ratio, right? For that kind of ETF, for that kind of leverage inverse ETF, we do see some investors do the intraday trading. So they won't buy and hold overnight. For example, like at 9:30 p.m. the US market open, they already have their own view. So they just say, hey, if their view is, hey, I'm pretty bullish at semiconductor. So when the US market open, they just say, hey, 3 times leverage tracking semiconductor. And then 1 a.m. Asia time, the investor bet high, the person say, hey, I make some money, and they just take profit. They will not leave it. They will not leave it overnight because they have no idea what will happen between like 1 a.m. to 4 a.m. During
exactly.
the time what will happen. So that's but that's extreme. That's some interesting case. That's for some leverage and inverse ETF. Whose the benchmark are already very volatile, right? But for something like S&P 500 is more like the blue chip or like like a big market cap, that kind of index, definitely they won't be that volatile than some specific sector.
Yeah, but one thing, Grace, I want to also understand that what sort of tracking error is there for your direction ETFs? Is it huge, or what sort of benchmark are we looking at for the tracking error?
Sure, I think that's also a very good question, because everyone definitely will ask about tracking error when it comes to ETF investment, right? So everyone have to know that. So for leverage inverse ETF, I think the tracking error is really I think
Are you
that
going to cover
it's
later?
really tight because sorry, yeah.
Are you going to cover in your slides later?
Yeah, I think I can use this slide because, like I mentioned, all the leverage inverse ETF are daily based. So actually, the tracking error, there's no. I mean, people cannot use tracking error to evaluate leverage inverse ETF because I mentioned it's daily
Right.
based.
Okay.
If you buy and hold like a 1 month, of course, leverage inverse ETF will not perfectly track their benchmark because it's daily based. But if you track daily, the tracking error is really high. It's just tracking its benchmark perfectly
Understand.
in the daily base.
Okay. Got it. Okay, I think in also today's market, right, market conditions, some investors may seek for maximize their opportunities through asset allocation and also product rotation for short-term gains. How can these traders effectively utilize leverage and inverse ETF in their strategies?
Sure, I think it's very. I mean that's a good question. Yeah, but actually, before I jump into the question, just also
Yeah.
want to just give you the not warning, but because we really spend some time to talk about leverage inverse, I just want to make sure, before you invest in leverage inverse ETF, make sure you understand leverage inverse ETF and know yourself. If you are a very conservative investor, you barely trade stock, maybe just trade the stock once or twice per year, and you are more like a buy and hold, you like a mutual fund kind of thing. You don't trade future, you don't know what futures are. Probably leverage inverse ETF, you should might not be the perfect tools for you. But if you are trading stock like every week, which mean you are kind of high frequency trading, and you've been using futures and you are trading options, of course, for that kind of derivative, which are much more complicated leverage inverse ETF. If you are this kind of investor, definitely leverage inverse ETF might be the appropriate tool for you. So that's very important. And back to Louis' questions, just want to share some observation how people use leverage inverse ETF. For example, in Asia, we saw many people actually use leverage inverse ETF as the rapid market exposure, because I mentioned the market kind of change quickly. So for example, the geopolitical tension escalates, overnight. People just, hey, if I want to hedge immediately, how to show the market, how to hedge the portfolio, they can just input the ticker of the inverse ETF. Immediately they can do the hedge, they can do the to protect their portfolio. And I also see many people use leverage inverse ETF alternative to futures contract. Why? Because investor might ask me, hey, like S&P 500 index is a big index, so of course they are futures, the S&P 500 futures, and futures can do 10 times, 15 times, 20 times. Why they do the leverage inverse ETF in US maximum 3 times? That's a good question, but you have to understand, in the world, not all the asset class have corresponding future contract to trade. For example, one of the famous index is MSCI, Emerging Market Equity Index, which is a big index, but its corresponding future contract is not that liquid. So we saw some like mid-size, small-size hedge fund, they will use some leverage inverse ETF tracking MSCI EM index, to do the like emerging market overall hedging purpose, or they are bullish on emerging market, something like that. And also recently, many people use left inverse ETF as the number 7 opportunities trading, because now it's earnings season, just kick off this week.
Yep.
So there are so many left inverse ETF tracking different kind of sectors in US or in the world. So people can definitely use the left inverse ETF, the short term. For example, this Friday, many banks like Citibank, Morgan Stanley, BlackRock going to announce the Q3 earnings, right? So of course, in
Yep.
US, people can find like a banking or financial related leverage inverse ETF, and Friday, the CPI index, of course, some US Treasury leverage inverse ETF will be popular, something like that. So these are some examples, how people can use leverage inverse ETF to execute, their short-term, tactical trading.
Yep. Certainly. So I think perhaps you also can guide us on, just now you have mentioned about the amplification effect on these ETFs, and how should a trader use that to their advantage, because I understand that leverage is always a double-edged sword. When you are not able to use it wisely, sometimes it will burn your model. I mean, Grace, do you have any advice for that?
Sure, I think so. That the baseline is that just everyone have to understand leverage inverse ETF. They are tactical short-term tool. They are not buy and hold. You have to remember that. And if you want to buy and hold leverage inverse ETF more than one day, for example, hey, 1 week, 3 to 5 days, please, you still have to monitor all these ETF daily base, okay? Because we don't know what will happen. And of course, in the long run, all the left inverse ETF will not track their benchmark index over the long period of time, because they are designed for the tracking, the daily base of its tracking benchmark, right? And so far in US market is still the most popular and mature market for ETF product and left inverse ETF. So definitely, we saw many global investors have been, trading the ETF listed in US market a lot. So, and the baseline, the most important thing is that before you start trading leverage inverse ETF, please, understand daily reset, daily compounding, and understand yourself. Are you are you a conservative investor, or are you, you are more like aggressive, and you are willing to take risk, and you understand derivative product. So, which is very important.
Okay, I think Grace has actually mentioned about a lot of times, please ask the investors to understand it is a short-term product, it is a daily base reset product, and I think every audience here would always keep that in mind. And I think also considering that the recent trends, right, there are so many different teams. What sort of what are the market teams that and also hot trading topics that Grace can actually mention to us?
Sure. I think here are some example, some popular trades I've been seeing this year. So, for example, the U.S. trading, the U.S. Treasury yield trade, including U.S. Treasury gold or gold miner, have been popular this year, as this kind of asset classes are very sensitive to U.S. Treasury yield move, right? And the other are semiconductor sector has been traded a lot in the past 3 to 4 years. And semiconductor leverage ETF, the bull ETF, is one of the 10 most heavily traded ETF last year in the US market. And the other topic in the other sector is U.S. technology sector, have been very volatile, in the past 2 years. And because of they are volatile, which also, attract a lot of short-term traders to use this kind of technology reverse ETF for the volatility trade. And this year, we also saw investors use the financial or banking sector leverage reverse ETF for the opportunity trade, or even or some event trading, right? As we remember what happened in this the regional bank crisis early this year, right? But after that, the banking sector kind of rebound really a lot back. So many people actually are trading this kind of thing, and definitely like a China Hong Kong trade have been always popular, although China Hong Kong stock market haven't performed that well, but because of volatility, so people still use that for some momentum trade. And the last popular trades, oil and energy sector, have been under the spotlight since last year, and recently because the geopolitical tensions escalate again. So definitely people pay attention to oil and the energy sector.
Yeah, I saw one question that is very interesting. Does most of, from Andrew Chang, does most of the inverse ETF give dividend? This is very interesting. I'm not too sure, so I think Grace can actually answer about this. Yeah.
Usually, I think leverage ETF definitely will have dividend, because leverage, like I mentioned, what's inside of reverse ETF. For leverage for ETF, there are cash, some equity, right? And equity have some dividend. Of course, leverage ETF will have dividend, but for inverse, usually just cash and derivative, swap or future. That's a short position. So there shouldn't be dividends from inverse ETF.
Inverse, yeah. I think the other way is that I mean, if Andrew is actually interested in buying inverse or leverage ETF to get dividend, I think I will refrain you from buying, because as Grace has mentioned multiple times that this is a short-term product. So within 3 to 5 days, you have to execute and exit. So perhaps it is not so decent for dividends. Is that correct, Grace?
Yeah, I mean, leverage inverse ETF are trading tool. So if you are, but your investment goal is to get dividend from ETF, leverage inverse ETF are not the right tool.
Correct. Okay, so I guess in this session, I think Grace has actually mentioned about a lot of the leverage and inverse ETF, what sort of risk is associated to it, and mentioned multiple times on short-term trading for sophisticated trader. But if you are able to capture the daily base reset kind of concept, perhaps you can actually try it out. But perhaps you also want to try out in a small model first to understand the mechanism behind it before you trade big into this kind of derivative products. So before, we call this an end. I would like to take some questions from the floor. Is there any questions that we can take? And maybe we can pull Grace to the backstage first, and also just show my face would do. Okay. So just now I saw some of the questions coming out from this. Before going to that questions, I think we also want to re-emphasize on the ETF Bonanza month. We are going to give out the $1 for every trade that you are going to trade throughout this period of time until 2nd of November, and the link is in the comment section. And the next one is the $5 of USD for first 20 unique users that will be trading throughout today until market closes. That will be $5. So trade more to get more rewards. I think that would be the tagline for today for the ETF Bonanza. And also we want to take some questions from the floor. I saw some of it to talk about, to ask about this question, which is what platform to use to trade these ETF. Definitely, I mean, we are from Malacca Securities, definitely use M+ Global app to trade. And this is our app itself. You can see on the right of the screen, this is our interface of our app. And if you want to find ETF, it's very, very easy. We have this ETF filter. Straight away at the main screen, scroll down, you can see ETF. When you press into that, you will see all the ETFs that you want. And you may want to trade index, you may want to trade sector or theme, you can click into technology, or you may want to trade bond, commodities. Everything is here at one of the one page itself. It will show you everything on the ETFs. And the best part of it is when you go down, scroll down to the last page, the last section, it is others, and there is short and also leverage and also high dividends. So those are the areas that you can find inverse and also leverage ETFs. So these are the areas that you want to go into and find out yourself. But certainly, is there any other questions that we can take from the comment section? what is the minimum capital to open an account to trade in ETF? I think there is no minimum. You can straight away open an account, but bear in mind we have also those promotions that is coming that we are providing, such as the real-time data and things like that. So you just open an account to get the free real-time data for 1 month, and also you can try to go into starting to trade ETF. Last week we did mention about how to use ETF to do dollar cost averaging method to buy into ETF. So those are the areas that you can actually look out for. But for sophisticated traders that want to try out the leverage and inverse ETF, this is the page that you want to go to, the ETF segment. Then you can go to the inverse and also leverage. Yeah. So any other questions from the floor? How to check the price of the inverse ETF as compared to the price, for example, the price of Tesla today as compared to the Tesla inverse ETF TSLQ. I don't have this question for you. I mean, I don't have the answer for you for this one because we don't have that. But definitely, if you want to look into the TSLQ, this is the way to go. Press the search function and go into the daily ETF. This will be the page. So we don't have the underlying and also the ETF together in one page. So I can't show you in our basically I can't show you in our app itself. Yeah, okay. There's one new comment coming in. Can I buy US bond through M Plus Global? Yes, you can actually go into this ETF function here. Just now you can see that there are different segments. There is bond. Okay, so treasuries would be the part you want to go into. And if you want to know what sort of what sort of underlying it is under this ETF itself, just click into those ETFs. So for example, I click into TLT, then I go into profile and I see what is the what do they track. So the benchmark for this is Treasury 20 plus year index. So it's actually tracking the US 20. Okay, so that will be it for today's section. Maybe we can pull out Grace again for this section for the last part. Because it has come to an end, and thank you so much, for Grace to share leverage and inverse ETF to us. And I think the key, maybe you want to give some key remarks, closing remarks for this session before we end today's ETF Bonanza second session of webinar. So perhaps you can give some key remarks so that to advise how can one of the investors can start off with, and also maybe you can also re-emphasize on the risk portion as well. Yeah, Grace?
Sure. I think leverage inverse ETF, like I want to emphasize again, leverage inverse ETF are not super complex product. They are ETF, so they are traded like stock and other ETF. But the most important thing is that leverage inverse ETF is daily based, so that's why they are not designed for buy and hold for a long run. And remember, the higher the leverage ratio leverage inverse ETF are, the more compounding effect they are. So
Yeah.
for, of course, 3 times compared to 2 times or 1 time inverse, definitely the compounding effect for 3 times leverage or inverse ETF will be much higher than that 1 time inverse or 2 times leverage inverse ETF. And I think last thing is that just to give people some not some tips, but according to the all the experience or story from some successful trader who use leverage inverse ETF, I think it's very important. The first one, just keep it as a short-term trading. And second of all, stop loss is very important. Stop loss. So many people who kind of use leverage inverse ETF and and have significant loss is because they bet on the wrong direction, and they didn't want to stop loss because they really don't understand it's daily base. So if you don't do stop loss, you continue to hold it. And many investors will misunderstand, hey, if I continue to hold it, one day eventually the price
You'll
for
come
left
back.
reverse ETF will come back. Sorry, they won't come back because
Yep.
they are not non-leverage ETF. For example, for SPY or QQQ, yes, but for left reverse ETF, no, because they are daily based. Think about that. So stop loss is kind of, just want to share with everyone. I know it's difficult for all the investors to do that, but you want to do left reverse ETF, keep it short-term trading, and definitely keep it disciplined. Okay, stop loss.
Yep.
And if in the short term you make some profit from leverage or inverse ETF, just take profit. Don't get too greedy and just think, hey, let me buy and hold and see what will happen. Maybe I can make more. But remember, it's daily base. So that's very important. Be disciplined and use leverage inverse ETF short term, and stop loss is the key for trading leverage reverse ETF.
Okay, I think that's about it. I think Grace had mentioned many times on short-term trading. Try to use stop loss and be disciplined in whatever you are doing using the leverage and also inverse ETF. I think thank you so much for your time. But before you go, I also want to invite you to this budget event. I mean, we are having this diving into budget 2024 this Friday. Our PM Prime Minister will actually table this budget. And it will be about 4 p.m. to 6 p.m. And straight away after that, we have this 6 p.m. diving into this budget 2024. Are we expecting more taxes going forward? So I think I will also want to extend this to you, Grace, because you can actually join in our webinar. So see everyone and also Grace in that webinar as well. And thank you so much, Grace, for giving us such a knowledgeable session this round. Thank you so much, Grace.
Thank you, Louis. Thank you, everyone.
Okay, bye-bye.
Thank you. Bye-bye.